Hello all of you, I hope you all are doing good. Today we are going to revise accounting standard 13, that is accounting for investment. But let me tell you very important thing is that here now. Most of the content in accounting standard 13 accounting for investment has already been covered in the investment chapter. Here we will focus only on the portion that are relevant for the accounting standard questions. Now understand this point. What is going to happen that now? When I take other chapters like the full-fledged chapters, amalgamation, consolidation, okay, cash flow statement, then branch account, financial statement, all those different full-fledged chapters. So what is going to, there is one chapter, investment is there. So in that chapter, we are going to cover how to prepare the investment account when we do investment in debentures, investment in shares, treatment of X right, cum right, okay, all those things we are going to cover in that particular chapter. Here in these lecture, what we are going to do that here today, we are going to cover only from accounting standard questions point of view. This is what we are going to cover here, okay, 9.13, okay. But there is a separate chapter on investment where actually I discuss with student how to prepare the investment account, okay. So here we are going to discuss only from the accounting standard point of view question. I know that what kind of question they ask from the accounting standards point of view, not a full-fledged investment account, okay. So we are going to discuss here meaning of investment, then classification and valuation of investment, current investment, long-term investment, investment properties, reclassification of investment from current to long-term, from long-term to current, and then disclosure part. Okay. Now, main thing is that here, if I say that here, the main thing is that here is a reclassification mainly. This reclassification and this valuation part. These two important. Okay, from the accounting standard point of view, they ask questions from these two only. Okay. Now one by one that here. What do you mean by investment? They say investment or asset which is held by, investment are assets which are held by an enterprise for earning income. So we are doing the investment to earn what? Income by way of dividend. So when we do investment in something that we get the dividends, we are doing the investment in shares that here. So we'll get the dividend. Then they say that here now is we earning income by way of dividend or what? Interest. So when we get interest, when we do investment in debentures or bonds, okay. Then it says that and for rental that here, or we are doing the, for rental we have given to someone, okay. For capital appreciation that here, the capital appreciation we purchase the land, we will wait for 5 years, then the value will appreciate in the market, will sell it. Okay, that is capital appreciation. Or for other benefit. Other benefit basically means that, for example, you purchase share to get the bonus shares you will get, okay. Or you will get the voting rights, okay, voting rights you will get like that, okay. So what is going to happen now? We are doing the investment that here now. We are doing the investment here to earn income by way of dividend, interest, rental, capital appreciation, or for other benefits that here, okay. For example, you purchase a property, you give it that property on rent that here, okay. So investment accounting is done as per accounting standard 13. So when we do the investment, we have to do the accounting as per 13. Now here we are not preparing with an investment account that here, that we are going to cover in investment chapter. So I will tell you that how to prepare the investment account. That is a separate chapter we have. Now here there are two types of investment, okay, current investment and the long-term investment. So first we'll discuss about what do you mean by current investment. So current investment means a current investment is an investment that is by its nature readily realizable. It means we can sell it anytime. The market is there. If we want, we can sell it anytime, and is intended to be held for more than 1 year from the date of such investment is made. Very important that. What is saying that intended? What is my intention that here? In case of a current investment, we are going to hold not more than, intention to hold not more than 1 year, but not from the date of balance sheet. Remember this. When I say current investment, what do you mean by current investment? My intention to hold it not more than 1 year from the date of such investment is made, from the date of investment that is. Very important that here. Okay. So this, for example, that here now, here if I say that here, if 1000 shares bought on 1st of April 2026, so 1st of April 2026, we purchase how many shares? 1000 with a 15-month holding intention. So my intention was to hold how many months? 15 months. So here going to end on 31st of March 27 and my intention to hold 30th of June 27. I counted 15 months from 1st of April here. The year will end on 31st of March. So on 31st of March 27, it is not a current investment. Okay, despite the remaining period is less than 1 year. Correct. What is going to happen? Now, suppose you are preparing a balance sheet that Now, when you are preparing a balance sheet here on balance sheet date, which is 31st of March 2027 that year, does it mean that here you will say, sir, now it is only 3 months left, then you will sell this investment that year. So classify as a current investment that year. Classify as a current investment here. Now, let me tell you that here now, this is not a current. You say, no, sir. Only 3 months left from the date of balance sheet. No. When we count this 1 year, not from the date of balance sheet, but from the date of such investment is made. So when we have made the investment, that is from the date on which such investment is made. So we made an investment here on 1st of April 2026. So I am going to count these 1 year for 15 months. I am to count from here. So if I count it 15 months from 1st of April 2026, the 15 months will count from here. So what is going to happen? I will see my intention not from the date of balance sheet, but from the date of investment is made that year. So that is more than 1 year. So here on balance sheet date, I will classify long-term investment. Okay. So they say if 1,000 shares bought on 1st of April 26 with a 15-month intention, as of 31st March 2027, it is not a current investment despite the remaining period is less than 3 months or less than 1 year. You can see that a 3 month only left that year. Still, I am going to recognize that long-term investment because my intention was to hold more than 1 year from the date of such acquisition is made. So we made an investment on 1st of April. Intention was to hold more than 1 year. That's why it's a long-term investment. Now, point number 1. A very important thing is that here when we talk about it, these 15 month and all that here, the very keyword that they have used it that way, which is very important, they use the word intention, no compulsion. So when you see the definition of investment, what they tell us that is intention. So my intention to hold more than 1 year or not to hold more than 1 year, current if it more than 1 year, then long term. But understand this, it is my intention, not compulsion. So when we acquire, when we purchase an investment, so my intention was going to decide whether it's a current or long term. But what is going to happen that my intention might change in future, correct? That is the important one. So it might be happen that here, as they are saying intention, so it might be happen today it is current investment, later on my intention change, so it might be a long-term investment. Today it is long-term investment, later on it may be a current investment, it might be happen. The reason is that here, because it is an intention. So initially I intended to hold not more than 1 year, so I will classify as a current. But then I change my intention to hold more than 1 year. So it will be converted into long term. Initially, I intended to hold more than 1 year. So long term. Then my intention changed to hold less than 1 year. So current. So we call them reclassification, which is very, I'm going to say, favorite area of ICA. They ask question on that. So we'll discuss about the reclassification of investment. Very important area. Okay. Now, after this, they say that here now is the valuation of the current investment we do at cost or our fair value, whichever is lower. So cost or fair value, whichever is lower. Any reduction or reversal is reflected in the profit and loss. When any value go down, okay, or any reversal we are doing, it will go to the P&L. Suppose the cost is 10,000 and the fair value is let's say 8,000. So I'm going to reduce it by 2. So I'm going to pass entry P&L account debit to investment account. Okay. Now what is this long-term investment? Long-term investment means any investment other than current investment. If investment is not a long-term investment, we are going to call them what? A current investment. You got the point here? Okay. Sorry, if investment is not a current investment, we are going to call them long term. Okay, so we have to know the meaning of current. If it is not current, then automatically it will come under the category of long term. Okay, now usually they say we do the valuation. Okay, usually they say we do the valuation at what cost? Usually we do the valuation at what? The cost here. Okay, but in case of the current investment, cost or fair value, whichever is lower. In case of long term, usually it's cost. I can tell you the logic behind that also. Okay, I tell you the logic behind that also. Okay, first of all they use the word usually because there is one exception. I will come to that exception. But I will tell you logic why in case of a current investment, long term, in case of a current investment, cost or fair value, whichever is lower. But in case of a long term, only why cost. I tell you the logic behind that. The logic is that when we talk about the current investment, my intention is not to hold more than 1 year. That's why we call them current investment. So when I say it's a current investment that way, my intention is not to hold more than 1 year. And if suppose the cost is 10,000 and suppose the fair value is 8,000, so there is a concept called the conservatism approach that here. So what I'm assuming that here, if the cost is 10 and the fair value is 8, so what is going to happen? The fair value is lower than the cost that here. So I will say that when I will sell this investment within 1 year only that here, I'm going to sell, most probably I'm going to sell it below the cost, because today what is there? The fair value that here, which is lower than the cost, suppose that here. So loss is going to happen if the fair value is lower than the cost. Okay, I purchased at 10, but the fair value is just 8. So within 1 year, I'm going to sell it at 8 only, most probably. Okay, so they say recognize the loss here only. I mean to say on balance sheet date only that here, due to the conservatism approach, because we are going to recognize the expected losses that here. Okay, how loss is going to come? P&L account will be debited, investment will be credited by 2000, reduce the value of investment. This is the concept of due to conservatism, we recognize the current investment cost or fair value, whichever is lower. Like that, what we do in case of investment is inventories that year, cost or NRV, whichever is lower there. Okay, but why in case of a long-term investment? They say usually, one exception I will come to that, but they say generally the long-term investment we are going to do the valuation at what? The cost that year. So when I say we are going to do the valuation at cost, that usually, why? It's a long-term investment. So might be happen today the fair value is lower than the cost in case of a long-term investment, but my intention to hold for a longer period of time. So might be the value will change in future. For example, if I say the cost is 10,000, listen carefully, cost is 10,000, fair value is 8. Still I will recognize it 10 only. I will not change the value. Why? Because it's a long-term investment. Today the fair value is 8. Might be it will increase in future. You got the point? So might be when you will sell it in future, we will not sell it loss that day. It might be happen that way. So they say it's a long-term. The value, market value fluctuate that year, but in the future it will increase, might be that year. So uncertainty. So don't do that here. Don't say cost or NRV, cost or fair value, whichever is low. Keep it at cost only that year. But the exception is that here we have to reduce the cost of the fair value if the fair value is lower and which is permanent in nature. I am to say if the cost is 10 and the fair value is 8. So normal rule for the long-term investor, I am going to recognize at 10 only that year. Okay. Here you will say, sir, here the conservatism not come because it's a long term. The value, the market value may increase in the future. Okay. But if the market value goes down and which is permanent in nature, in that case, we will recognize at cost or fair value, whichever is lower. Okay. That's why they use the word usually. But here they say, not this exception. If there is a decline other than temporary, let me tell you that here accounting standard use the word other than temporary. Other than temporary is nothing but what? Permanent. Okay, is nothing but what? The permanent that here. So other than temporary is nothing but permanent. You got the point that here now. So but they don't use the word permanent. So they use the word other than temporary. So we'll also use the other than temporary. But actually that is permanent. If permanently decline in the value of the long-term investment, the carrying amount is reduced to the decline to recognize the decline. I mean to reduce the value to fair value. Suppose 10 is the cost, fair value is 8, we are going to recognize 8 if that decline is permanent in nature. Now reduction is reverse. Suppose that decline is, we assume that's permanent in nature, but suppose it is reversed in future and the value rises or if the reason for the reduction no longer exists. Let me give an example that now. Just an example. Suppose you purchase a shares of Kingfisher company and because of some fraud happened that here now, then what happened? Vijay Mallya is in UK. That's just an example that here. Okay. So what happened that is suddenly the value of the companies goes down that year. Okay. So what happened? We say we have purchased the shares of we have purchased the shares of a Kingfisher company and their values goes down there. So what happens here then? Their values goes down here now. What is going to happen now? If we say that it's a permanent nature, it is not going to increase that. So we say let's reduce the value of the investment. But suddenly we come to know that Mr. Mallya come back to India. He resolved all the issues there, and now suddenly the value is going to now increase in the market because everything is sorted now. So what is going to happen is in that case also I can increase the value that again I can reverse the investment that I've reduced down. Or they say the reason for the reduction is no longer exists that here. Now suppose that here, reason that here. Why you have reduction? Because of some fraud. But later on investigation find out there is no fraud at all. It was just an allegation that here. I'm just giving an example. The reason for the reduction no longer exists. Now we have to reverse it that here. You got the point here now? But generally remember that here now we are going to do the valuation fair in these the current investment at cost or fair value, whichever is lower in case of our long term usually at cost, but if they permanently decline in the value, then we have to reduce the value here. Permanent means other than temporary. Now, one more thing is that here now this part is important when I talk about the valuation part. Okay. Now is the investment in property. What is this? When you do the investment in land or building and which are not intended for substantial use in the operation of the investing enterprise. Suppose you have purchased the land and building that here, but your intention is not to use for the purpose of business. But if you're using it for the purpose of business, okay, then it is going to cover under accounting standard 10, property, plant and equipment that here. You have an office building. extend that here. Okay, you have a land or you have a building on that here, you are using for the purpose of factory, that is the extend that here. But if your intention is not to use for the purpose of what, you're not using it for the purpose of operation. Okay, I'm going to say we have done the investment that here now, and my intention is to appreciate the value, then the value comes, the value increase in the market, I will sell it out that here. Got the point that here. So they say in that case, or for the rental purpose, we do that here now. But what happened? That is going to cover in the accounting standard in these the 13. What it says that now, follow the cost model. They say we have to follow the cost model. Revaluation model is not allowed. So when you do the investment in property, they say here the revaluation model is not allowed. Okay, only the cost model we have to follow, what we have covered in accounting standard 10. But what is new here that here they say cost of shares related to the right to hold the investment is added to this carrying amount. What does it mean that here? When we purchase suppose here I'm going to say that when we purchase the shares, and which is mandatory, suppose that here, for example, the cooperative society. Cooperative society has the for example that here they have a for example a land that here. Okay, so I want to purchase that land, but the cooperative society says that no, Zubair, if you want to purchase the property here, you have to purchase suppose 10,000 shares of a cooperative society. So it means which is mandatory on me to hold the rights to purchase the shares, to purchase the land, which is mandatory on me to purchase the shares of that particular cooperative society. So that is going to be part of what here now. That cost of share will be added to the cost of the property. Okay, suppose you purchase the property of 10 crores that year, but you have to purchase the shares of 50 lakh that year, which is mandatory that year as per the rule that year. Suppose, okay, so I will say, okay, 10 crore plus 50 lakh, that is going to be 10.5 crore that year. That is a part of the, that will be cost of the these investment in properties that year. Okay, now important point I am coming here that here now. What is this? The reclassification of investment. You know that here, our intention to hold not more than 1 year, then we call them current investment that. But don't you think so that my intention might get what change? Our intention might be change that. It might happen that year. Okay. So now remember, if you write it down somewhere that if you have a rapid gist, then it is super cool that you just write it down there. Okay. Now, if I say that here now, I want to reclassify. Okay, I want to reclassify. They will give you an exam that here. The keyword, remember that from the current to long term. In that case, now the question arises that because my intention changes that. Now, how to do the valuation now? Previously it was current, now it is a long term. Okay, now it's when you're changing it, and on that date we have to do the valuation cost or fair value, whichever is lower. Obviously, whichever is lower here. Okay, let me say whichever is lower here. Okay, cost or fair value, whichever is lower. Should I write lower? Lower. Okay, in both the cases. Okay, so cost or fair value, whichever is lower. But if you are reclassifying long term to current, if they ask you cost or carrying amount means the book value. What do you mean by carrying amount? Is the book value. Cost is not book value. Cost is the price at which you have purchased the investment. Carrying amount is the value which is appearing in books of account. Okay, so cost or carrying amount, whichever is what, the lower here. Cost or fair value, whichever is lower. Cost or carrying amount, whichever is lower here. Okay, now please understand this. What is going to happen now here? They say this fair value or this what, a carrying amount here, whichever is low. But what is happened in both the cases, cost is common. But when you are reclassifying from cost to the current investment to long term, remember the cost of fair value, whichever is lower. From long term to current, whichever cost, or here is the carrying amount. Here, that's why I highlighted. Here it is fair value. Here it is carrying amount. One more thing to for the purpose to make you confuse that here. What they will do that they will give you all these three figure might be cost, fair value, carrying amount. Remember that. Current to long term, fair value. Long term to current, carrying amount. Carrying amount means the book value. But they will give all this figure to make you confused. Okay, now point number 2 that here. They will also give you these calculation, this amount of fair value, carrying amount on different dates that day. On the balance sheet date, on the date you are doing a reclassification. All these we do that here now. You know, when we do all the, what? Just give me a minute. Okay, no problem. Okay, now understand. All these we do that here now. All these, I hope this time it happened properly. Okay, all these we do on the date of what? Reclassification. On the date of reclassification, or you can say that here, or reclassification or transfer. Whenever you're doing the reclassification that here now, on that date you have to do the comparison. Okay. So remember this, on the transfer date or reclassification, same thing. On the date of reclassification, you have to do the comparison. This, okay, remember this. Write it down somewhere. Disclosure is not at all important here, just for the reference purpose. It is given here. Okay, not important. But one thing is important that here now is write on one note there in rapid gist, page number 121. Write on one note. Write down. AS 13, accounting for investment. AS 13, accounting for investment, not applicable to banking company. Write down please, okay? AS 13, accounting for investment, not applicable to banking company, insurance company, and mutual fund company. Okay? So AS 13, accounting for investment, not applicable to banking company, insurance company, mutual fund company. Please understand. They are talking about, suppose you purchase the shares of some insurance company. AS 13 is applicable to you. They are saying account not applicable to that mutual fund company. All these banks, mutual fund company, okay, insurance company, AS 13 is not applicable to them. They have different valuation. They do different valuation, okay, as per the RBI guidelines and all that, okay. But for those bank insurance they're talking, when we do the investment, we have to do the AS 13 only. You got the point here? Okay. Now, done. Only 2 pages. Okay, don't worry about these bonus shares and all that I will cover in investment chapter. We have a separate investment chapter also. Marathon is going on. I will make a separate video on investment chapter as well. Okay. So, yes, this is investment chapter. Okay, it will cover investment chapter. This how to prepare the investment account and all that I will discuss with you in detail later on. Okay, so many things here. Shares. Okay. All this will come when we will cover investment chapter. Okay, but here today we have covered from the accounting standard point of view, because only 2 type of question they ask from the accounting standard point of view. First is the reclassification and the valuation one. That's it. Okay. Now come to question number 40. Okay. Now come to question number 40. What it says that question number 40, simple question. Now I have written something, but listen carefully that what it says that here now, they say that here now is Macy's Innovative Garments, a manufacturing company limited, invested in the shares of another company on 1st of October 2023. So please listen. When we have acquired the shares on 1st of October 2023 at a cost of rupees 2,50,000. So with that, this is a date of purchase. The date of purchase when we talk about, listen carefully, very simple. Date of purchase is for shares. Okay, that is the 1st of October 23. Okay, at a cost of rupees 2,50,000. So I have written this at a cost of rupees how much? 2,50,000. It also earlier purchased gold for rupees 4 lakh. So we purchased a gold, you can see that here, at rupees 4 lakh that here, and silver at rupees what? 2 lakh. There. These are the cost of shares, gold and silver. On 1st of March 21, market value as on 31st March 24. These, okay, we purchased a gold on 1st of March 21 and silver on 1st of March 21. So we purchased on these dates that here. Okay, the 1st of October 2023 is the date on which we purchase what? The shares there. Okay, got it. These are date of purchase that here. These are date at these price we purchased it that. Okay, now understand this part. Okay, now what is going to happen now here that here? When we talk about the market value, that when you talk about, they have given the market value of all these, it is already given in question. Okay, so this gold shares are 225, gold 6 lakh and silver is 3 lakh 50. And they ask you that here now, how about the investment will be shown in the books of Mrs. Innovative Garment Manufacturing Limited Company Limited for the year ending 31st March 24 as per the provision of accounting standard 13, accounting for investment. Now the question arises to do the valuation cost, I am going to say long term or current. In case of a current, cost of fair value, whichever is lower. In case of a long term, usually at cost. What happened now? It is not mentioned in question what is your intention, but we can find it out that. Because we purchased the shares on 1st of October 23, only this year. On which date we are doing the valuation? 31st of March 24. So we purchased 1st of October 23. Oh, just 6 months ago only that year. Okay. So it is not more than 1 year. So we assume that their intention was to hold not more than 1 year. Okay. That's why we call it short-term investment or current investment. Both are same. Okay. The two lower. The cost is 2,50,000. Market value is 2,25,000. So lower is 2,25,000. So I write it down 2,25,000. Now in case of gold and silver it's a long term only. Why? We purchased the gold on 1st of March 2021 and silver also. And we are doing the valuation 31st of March 2020. It is more than 1 year. Okay. So obviously it is long term only. Long term we will do usually at cost. What is the cost? Cost is 4 lakh here and silver is what? 2 lakh. So I will write in 4 lakh and 2 lakh. Here you have the option. You can give the option that if we don't know this gold and silver, it is long term only. We already hold more than 1 year that. Okay. In case of a share, we don't know that it is a 6 month pass, but it depends on the intention there. Okay. So, but you can alternatively, you can say that here, if their intention to hold more than 1 year, shares will be recorded cost only. In that case, it will be recorded at 2,50,000. Okay. Now, second question that here, now question number 41. Okay. So this is on the reclassification that here. Okay, they say on 15th of June 2018, Y Limited wants to reclassify its investment in accordance with accounting standard 13. Device decide and state the amount of transfer based on the following information. Remember that they are talking about reclassification. So what is the rule that here? The current to long term to current. You remember that current investment to long term investment, long term to the current that here. So you just have to write it down, the cost or fair value, whichever is lower, cost or carrying amount, whichever is lower. Okay. And remember that beta. That when you take the lower, remember on the date of transfer. So they will, to make you confused, they will give you the date of balance sheet. But what is the date of reclassification? 15th of June. They stick to 15th of June. We need this figure, fair value and carrying amount on 15th of June only. Okay, one by one. Very simple. A portion of a long-term investment purchase on 1st of March 2017. They purchase, this is the purchase cost are to be reclassified as a current investment. So it means they long-term investment they want to reclassify as current that year. Now what is going to happen now is here they are reclassifying from long-term to the current investment. Okay, long-term to current. Okay. The original cost of this investment 14 lakhs. What is the cost? 14 lakhs. Long-term to current. This rule. Okay. Long-term to current. This rule. The cost was how much? 14 lakhs. But had been written down by 2 lakhs. Remember that. Written down by 2 lakhs. Written down by 2 lakhs means they have reduced the value in the past by 2 lakhs. So they purchase at 14. Then they reduce it by 2. So the book value is 12 now. 14 minus 2. So cost is 14 lakh. Book value, carrying amount means book value. And the carrying amount is how much? It's 12 lakh. Whichever is lower, 12. So we will do the valuation at what? 12. So simple. Okay. Now, second, another portion of the long-term investment purchase on 15th of June 2017 are to be reclassified as what here? The currents. They again long-term to current. So this rule, second one. Okay. The original cost of these investments 7 lakh. So what was the original cost? 7 lakh. But had been written down to 5 lakh. Written down not by. They have not reduced by 5 lakh. They have reduced to 5 lakh. It means the book value is 5. Understand the difference here. Here they say here by and here they say 2. Understand the basic difference. It reduced by means they reduce the value by 2 lakh. Reduced to means the value is now at the 5 lakh. Okay. So the cost is 7 lakh and the book value is 5 lakh. Whichever is lower, 5. So we'll do the classification. Reclassification will be done at 5 lakh. Okay. Now, a portion of the current investment purchased on 15th of March 2014 for rupees 7 lakh okay, are to be reclassified as long term. Now we are going from current to long term. What is the rule from current to long term? Current to long term, cost or fair value. Cost or fair value, whichever is what the lower here. Now they say that here now the market value. Okay, the market value of these investment on 31st March 2014 was 6 lakh. So what is the market value? Is 6 lakh and the fair value on 15th of June. Now understand this one. We know the cost. Cost is 7 lakh. That is the cost. I need that a cost that here now. Current to current to long term. This one, sorry, cost or fair value. I know the cost is 7 lakh. But the fair value, to make you confused, they have given two dates out here. The fair value of balance sheet date and fair value 15th of June. We want 15th of June, not balance sheet date. Okay. The 15th of June, the fair value is 8.5. So 8.5 and 7, whichever is lower. 7, so it will reclassify 7. Okay. Now another portion of current investment purchase 7th of December 2017 for this 4 lakh. 4 lakh is cost are to be reclassified long term. So from current to long term. Current to long term. So we purchase at what price we purchase that here now? We purchase at what here? The 4 lakh. We purchase at what? The 4 lakh that here now. And we want to reclassify that here. Okay. Now from current to long term. So we have to see that the fair value on the date of transfer. So the market value means fair value of these investment was on 31st March, which is balance sheet date, and 15th of June. So we want 15th of June. Okay, that is date of reclass 3.8. So 4 and 3.8, whichever is lower, 3.8. So we will reclassify 3.8. Done. Your 8 marks. The 4 question maybe the A, B, C, D, 4 marks or 7 marks. They may ask you that. Okay, so this is all about accounting standard 13 that we have covered today. That here now. Now next is. Marathon also is going on. I'll separate the long video is going to come on accounting standard 14, that is amalgamation that here. Okay, very interesting that amalgamation long chapter that here, but people find it difficult, but it is not a difficult at all. In fact, which is very simple topic that is. Trust me, amalgamation is not at all difficult. Okay, just need a practice. I will tell you there. Okay, anyways that here now. So next in accounting standard series, I am to cover AS15. People are so much afraid from AS15. No. It is very difficult. No, it is not at all difficult that here. I will discuss in my the next video that is very, I'm going to say that your notes prepare is very, it simplify the accounting standard, the 15, very simple, all steps, how to calculate with all these examples there, steps, how to do, everything is mentioned. This is 15 that here. Okay, simple, very simple. Okay. Anyways, so that is for today, accounting standard 13 that we have covered from the accounting standard point of view that here. And if you like it, you can comment there that is something, or you can share with us the intermediate student that here. Now I hope you all students from South India that you like the revision series that I'm taking that here now. Once again, thanks to all of you that here, and remember that here few days are on the left for the examination. You just have to really work hard and concentrate, be focused on your work that here, on your studies that here, and definitely you are going to clear the examination that year, but be confident that year. Avoid the negative people that year, okay? Which is very important that year. Keep your mind positive that year and see what miracle you will do. Okay, that is for today. Take care all of you. Bye-bye.